Hello, trading is closed on February 10th, 2016. At yesterday's close, I thought it was a pretty negative pattern unless we gapped up and promptly took out this high. Well, we did. We came nowhere near the 1835.49 target. There is a standard rule that if you have a strong gap in the undesired direction, that the target, the call is a dead before the market opens. Let's look at today's pattern. Over here there's an ultimate sell signal, and there's also a signal that ultimately we should trade higher. MEJT says this whole move is false, gives us a target of 1873.07, most likely to print tomorrow, and says that the same number is a target of an ultimate buy signal. Now, the only ultimate signal which hasn't worked since October of 2013 is one which came right at the all-time high, and once again failed signals that major changes in trend are a part of the system. So there's a high degree of confidence that 1873.07 will print, although its preferred time frame is tomorrow. It doesn't have to for the ultimate signal. It's the same price target for two different patterns. Well, futures are tanking like crazy as I'm recording this. It's very negative when this pattern does not close at the day's high. When you gap up like this, hit all kinds of new highs and can't hold on to any of them, can't hold on to any of these lows. It's a pretty negative pattern unless you gap up sharply and ideally take out today's high. Futures are in such a tank that seems like it's a pretty tough chore. I can't say we'll do it, but I'm saying it isn't impossible, and here's the reason why. The market tanked like anything, and the number of new highs minus new lows dried up. It actually went up today. That's divergence. We still have the sequential signal. On the half-day chart, it's a buy. Bars 11, 12, and 13 of the combo buy signal don't have to obey all the rules. These aren't trading at new closes, at new lower closes, but you could interpret it as bars 12 and 13 of a combo buy. As we've been dropping here, we have major divergence. If you look at a daily chart, MACD going back to the lows in August, we have new low prices and major MACD divergence on that also. Here's the 130-minute chart. We've actually now traded over the close of number 8. We're still on a buy. This is the wave count I've been using. If this really were wave 2, this should be an impulsive move down, and I wouldn't like to see this overlap. Of course, you can make all kinds of 1s and 2s and 1s and 2s to allow for the overlap. As far as I'm concerned, that's just asking for a count that doesn't work. What if this is the count? What if this is wave 1? Here's your ABC. Wave 2 now corrects almost all of wave 1. Here's your 1, 2, 3, 4, 5 ending early. Wave 5 is equal to wave 1. And you have perfect Fibonacci hits at the 38.2 and 61.8% levels. If that's true, then wave 1 of black 3 ended here, and we should get a wave 2 ABC going up. I think this is a pretty negative pattern unless we gap up sharply, but I think there are a number of signs that recent lows may hold, and instead of having a crash, I think we could have a pretty good rally over the next week or two. Of course, if we undercut recent lows, the whole thing could fall apart. But I think we could be making a bottom in this area, and that is today's call.